You include Figma among the companies that you've been serving. You saw the demand running into the IPO. Can that be replicated, Brianne?
Sure. Thanks for having me. Figma was really an encapsulation of a lot of things that the public market has been waiting for. You have a really strong growth story, 50% plus growth year over year, profitability. There's AI in the tech stack. I think any company going public in the next year or so is going to have some AI component. And they have a strong brand. And actually, since the failed Adobe acquisition a few years ago, that only really helped to build their brand. So they really were a great case example for what types of companies, what types of quality companies do well in the market. And I think that the market is really open for other companies like that who can exhibit, strong fundamentals.
There's doing well, and then there's gaining 250% on the first day of trade. How much is that an issue with the pricing of these IPOs and a pent-up demand, not just from institutional buyers, but from retail buyers too?
You're exactly right there. And I think, that spike of demand that wasn't, seen in the roadshow really speaks to the fact that the typical roadshow process really doesn't factor in retail demand. So yes, you're getting indications of interest from institutions, you're locking in those long-term investors, but as we've seen over the past few years, the retail market is becoming more and more important, especially as we haven't had many IPOs. So there's been a drought of IPOs, and there's just so much demand for access to these innovating tech companies. We see it on EquityZen's platform, where more individual accredited investors are coming to invest in these companies pre-IPO. So for the broader market who maybe isn't an accredited investor and doesn't have access, there is just huge demand. So I think it really begs the question of how can we start to quantify that demand going into these IPOs? Because yes, you want a successful first day, but 250%, that's kind of out of the ballpark.
Brianne, I'm one of those people that reads the regulatory filings, right? And so you have a company with an adjusted gross margin of 92%, software, amazing. But it just felt like on Thursday, you were there with Caroline, right, at the NYSE. Was anyone doing any of that because of fundamentals and how much money they make? Or did they just think, great, tech IPO, let's get in?
Yeah, there is certainly a lot of exuberance in the market that in some ways is irrational, is outside of the realm of any valuation you might get to by looking purely at the S1. So I do think it talks to this broader market demand that isn't necessarily always looking into the fundamentals, but we were outside the exchange. We were talking to investors who were excited to participate in the IPO. These are individual investors who had, their orders in and whatnot. And I think it just speaks to the fact that there is a lot of demand, but the risk of that is if you're an individual investor buying in on that IPO day, you could lose out when the stock normalizes over time. So there's certainly risk there that isn't always factored in.
Let's ask the age-old question. Is the tech IPO window open, slightly ajar, closed, and due to open? Where do you think we stand in the environment?
I would say that the tech IPO window is open for quality companies. So we've seen that with Figma, with Circle, with CoreWeave, and some of these IPOs. So I don't think just any company can go public in this market and do well. But these companies that have been preparing for a long time and already have those fundamental pieces in place. You have to remember a lot of these unicorn companies are 10, 15 years old. A lot of them, like Figma, plan to exit in the 2021, 2022 timeframe, and maybe those plans were put on ice as the market cooled down a bit. So the companies that we expect to see in the coming months are these quality companies that are prepared and have been preparing for a long time.
What's really interesting, actually, Dylan Field said to me, I really hope everyone reads the risks in our S1, and they go through them in a detailed fashion. He's very transparent that he's investing in this business, he's taking on AI. But what I really wanted to talk to him about and didn't have the time was the Bitcoin that they have on the balance sheet. And this is a company that's actually exposed to another narrative that retail investors love. How much are you starting to see that in these pre-IPO companies?
Yeah, crypto is becoming one of the most popular sectors amongst investors on EquityZen's platform. So it was the #6 most popular sector that we saw in Q2. And there's a lot of tailwinds that are supporting the crypto industry. Obviously, you saw Circle's really successful IPO. You have a very crypto-friendly administration, and then you've got some of the biggest financial institutions and retailers launching their own stablecoins, really adding validation to the market. This has led, to more potential IPO activity. You've got Gemini, Grayscale, and others, in the crypto space looking to go public. So that's certainly, I would say, the number 2 narrative that we're seeing after AI for companies, both in the pre-IPO market, but those preparing to IPO as well.